So let me update you on how the account is looking from directly inside the brokerage. If you look in the middle of your screen, you can see that the account is up 24% for 2023. So yes, this is a return that I am extremely happy with. And the plan is just to continue replicating a similar type of return next year and the year after that. But you know what? The madman in me still thinks, where could I have got an even better return this year? And I'll tell you exactly where that is. If you look right here, you can see a dip in the equity curve. And this dip comes after a substantial month after month rise. What actually happened was I just got cocky. After winning multiple trades for multiple months in a row, I started to take positions on things that I wouldn't normally trade. As a result, took a bit of a loss. And this loss probably cost me about 1% in return. Nevertheless, made that back and more in the next months that followed that. But again, 24%, over the moon with that. Very strong return, and I can't complain. And that being said, we still got the best part of November and the entire month of December, where I am looking to squeeze out another 2.5 to 3%, getting this very close to a 30% return for 2023. But as it stands right now, I've pretty much exited most of my positions. And that's a very good reason. So when I jump in and show you the charts, you're going to see why I haven't got much positions on right now. And I am waiting for the market to do a couple of things before I go ahead and enter into some more positions and some more trades for the month of November and December. The SPY has spent the last 4 days at this level of supply. And if you look at the TQQQ, it's also at its own level of supply. And the SOXL is also showing the exact same thing. So what we should expect is the market to pull back from this level. That would be the very next move in the market. But here's the thing. If we actually zoom out, look at the structure of the market, you can see that we got this top line level of resistance. And given the fact that we've had such strength into this move, and it's made multiple touch points, and it's got the backing strength that it put in throughout the beginning and middle of the year, we should actually expect the markets to reverse and move higher, breaking through that resistance barrier and making its way towards that 450 level. That would be the next two legs in the market, because when the market does pull back, it's going to wipe out 3 to 4 days of gains, take those that were long, that got into long positions here, out of their positions, create that false move of the market going lower just to reverse and move much higher. That is what I am expecting, and that's what is on the cards for the market. A pullback into that area of around 430, and then a reversal throughout the back end into early December. Remember, this is a seasonally strong period for the markets, and the market is set up to play out that seasonal trend that's put in over the last number of decades. But having a pullback would set the market up well for this. And also, if you look at the RSI, you can see that on a 4-hour, RSI is looking overbought. It would go ahead, reset that RSI, and essentially give it that juice that it needs to move much higher. And that would be the next two legs in the market. Now, given the fact that we've had such strength into this level of supply and the overall strength of the market, I wouldn't look to go short here. I would look for entry once that first pullback leg is complete, and then take advantage of that much more powerful move higher. That's what I'm waiting for in the markets, and that's what I'm looking to take advantage of. And this should take place across the market. So if I go to the SOXL, I would be expecting the SOXL to do the same thing. Pull back, take out the last 4 days of gains, and then move higher, breaking through that resistance barrier, making its way towards that $20 mark.